Hi, this is Zak Mir with the Bulletin Board Heroes here at Vox Markets for Friday, the 9th of July. Starting off with Augmentum FinTech, which makes its debut here. Here we've had two gaps to the downside last month, a rather painful one in the beginning of June and then one just shortly after. What's interesting here is that we may have, after a slight bear trap below 135, we may have a gap close buy signal, so it's like a bear trap gap reversal. End of day close above 143 or end of week close above 143 should give us at least obviously the 50-day moving average at £1.51 and then the potential of closing that gap over the next month or so up to £1.60. So about 143, looking for £1.60 on Augmentum. Moving along to a stock which had a placing just recently. It's always interesting to follow up on these situations. Bidstack. Here we've got a situation where I think the stock had some news today as well, but we got the shares just hanging just below the placing price. I think it was around 2.2 pence. Current situation is that we're still in the aftermath of a gap to the downside. Really need to see an end of day close above 2.3 pence really to get the shares back on the road. Some hint of bullish divergence there with the lower low after the gap, not matched by a lower RSI trace, so that is at least a positive for the shares. But I think 2.3 pence probably the level to break to regard the stock as being safe for the bulls. And if we can get 2.3 plus, then the initial July resistance of 3 pence could be on the way, maybe by the end of this month as a best case scenario. Moving along to Sizzle, which seems to be trying to live up to its name. We've had a sort of falling wedge and a rather sort of a sharp sell-off for the shares since the middle of May, but gapped up today and breaking that falling wedge. The resistance there around 5.3 pence, so above 5.3, the broken resistance, looking for 7 pence again, which was post-June resistance, and that may be seen by the end of this month. But it could be a situation where we've got the low in place, or a lasting low in place for Sizzle Biotechnology over the near term. No such problems for the next stock, which has been on a bull run for quite some time now. And we got Cambridge Cognition with an update as well for the stock. And today on a contract win, I think it's £1 million over the next 6 years. Current situation is we're in this rising trend channel, which I identified before. That's heading up to £2.80, and that could be seen maybe by the end of next month at the current rate of progress. Good to see that the new support recently around the 160 to 165 area is well above the old resistance around £1.50. That tends to be the sign of a potential fresh move to the upside. So £2.80, the perhaps ambitious target, but with the gap higher that we had last month, which remains unfilled, the momentum is certainly there, and the fundamentals obviously backing that with the latest news. On to Gemfields, where I'm a bit slow on the mark here, or off the mark. Here we've got a situation where the shares are in a rising trend channel. That's been in place since April last year. Top of the channel heading towards 20 pence. New support coming in around 12 pence. That was old resistance in February last year. So above 12, looking for 20 pence on Gemfields, with a decent saucer base there for the shares as well. So basically breaking the 12 pence level makes the stock look pretty attractive from a technical perspective at the moment. Not too many situations to look at the moment, so we're looking at potentially new ones at the moment on the small cap area. Here we've had a gap down for global petroleum in April, down below the 0.6 pence level, but we've broken back above the 50-day moving average around 0.43. We want to see more price action above that level, maybe a weekly close today and then following on that next week. Initial target here to return to fill that gap at 0.6. Best case scenario of the next 2 to 3 months up to 0.9 if we are indeed in a broadening triangle from March on the daily chart. Look, moving along to a situation which has been frustrating to say the least, with the Barry Rowe saga continuing. Sort of investors left in the lurch for quite some time on this, but we've got decent moves here for Lansdale through the 50-day moving average at 0.7, several days of the shares being above that, and also now breaking last month's resistance around 0.77. Above 0.77, we could see the stock heading towards initially the 50-day moving average at 1.2, and then the top of that rising trend channel from March up to 1.4 pence, maybe on a 2 to 3 month time frame. But the big win here really is breaking above 0.7, and in fact also closing that gap at around current levels. So an end of day close well above 0.84 would be a sign that we've had a gap close buy signal, and the shares could be on their way to the upside. One of the best rises of the day is one which is followed, I think, quite closely by many small cap punters, MobilityOne. We had that double top through 45 pence for May and June, and came back sort of quite sharply, sort of 50% retracement for the shares, almost exactly 50%, which is not bad. What we'd like to see today is an end of day close above the 50-day moving average at 27. If we can get that, then we would hopefully be looking for a return to the 45 pence plus area over the course of the next 4 to 6 weeks. Stop loss on the buy argument currently around 23, which is the initial July support for the shares. A new name for the bulletin, another new name for the bulletin board heroes is coming up next, National World. And here there's not much charting data to look at, but what you can see is that the shares have comprehensively broken that June resistance. That was there at 25 pence, and above that we're looking for greater highs, let's say. Just guessing, or having to guess where the top of the channel is, I'm guessing that it's towards 45 to 50 pence, and that might be seen by the end of next month, while we remain above the 25 pence levels, above 25, looking for 45 to 50 by the end of August. Finishing off with Open Orphan, which announced contract news, but also suggested that not only will it, or has it been EBITDA positive for the first half of 2021, it can also do that for the full year as well. Nice rebound for the shares, basically at the January support zone, which was around 23 and 3/4 pence. So the low so far this month around the same level, in fact. So double bottom there for the shares, and while we're above 23 and 3/4, looking for a recovery here. Initial target here, the 200-day line. If we can get above that at 29 pence, then we should be back towards that resistance line there from April up to 35 or 36 pence. Big picture on the technicals here is for the shares to head up towards not only retesting April resistance, but up towards 50 or 55 pence, which is a May 2020 resistance line projection. And that is valid on it, maybe a 2 to 3 month time frame, while we hold above the mid to low 20s on Open Orphan. That's it for me today. More updates perhaps over the weekend.